Hi, my name is Ford Baker, and I'm a CPA in public accounting. I have a local firm called the Baco Group, and in 2018, 2019, I came up with an idea that we called Baco Tech. It was a new workflow solution that we were working and working with in our firm. Give you a little bit of background about me and why some of it ended up working was I started off as an audit manager. I started off in audit and progressed all the way to manager and with a local firm. But I had also started a family young. My firm paid commissions for new work, and I found tax business to be something that was a lot easier to sell than audits. So most of my own clients were my tax clients back in the days where people would do tax and audit together. So I had a lot of audit background, but my practice became primarily tax. By the time I opened my own firm in the late 90s, I was 100% tax, didn't do any more audit, but I always sort of understood how audits worked, how the lead schedules and things like that, how they were put together. So I had a little bit of background in both. Because of that, I had a client that I did a lot of tax returns for that was going to prepare consolidated financials. And so my ability to put together work papers and lead schedules and things like that for a entity that at the time had 43 files was something I had an intricate level of knowledge of their accounting, and so therefore I started to put together this consolidated package to get ready to get audited. After that, we needed to start preparing reports and then monthly reports to be in compliance. They went through some funding and they received money, and we had compliance certificates that they had to produce, and they grew and grew and grew, and ultimately had 70 different entities, and I could consolidate these financial statements in about 30 minutes. And I also learned that there was um, I also realized that I could, the software, my spreadsheet could tell me when things were out of balance and when I had issues. I could see them up front. So I was able to get this pretty quickly. And I started to think, what if I had something like this for all my tax clients? What if I could do this with my own tax clients? And I began to play with that tool, and I developed this thing I in-house called the accounting machine, um, that really brought that to the top and really started to address the issues. And as I started to peel back and work with it, I sort of felt like I not only have found a tool, but I think I found something that might fix busy season. But if busy season is fixable, if there's a reason, then there has to be a reason it's broken. Why is busy season busy? There has to be something you can fix. And that became my big focus, was to find out. I had this tool, wasn't exactly sure what I was fixing. And what I eventually found that to be was that we had a workflow problem at CPAs, a workflow issue. And so maybe a little bit of an understanding what is a workflow, what does a process look like, would be something that we could look at and talk about, from maybe building widgets, something that would happen there. So if we were building widgets, we would provision raw materials, and then we'd take a series of steps that we would go through to build and assemble a widget. We would repeat that process. We would work through it so that it could become faster at it, and we could begin to repeat the same thing over and over again, and we would get more and more efficient and faster at it. And that's what a process looks like. Um, and I, I was really kind of challenged. Do we have a process? Do we have a workflow? And so I started to ask, what does a CPA firm's workflow look like? I asked that to CPAs and was really surprised to hear how many of them thought that they did, and what that looked like. They would start off and they go, "Oh, we get a route sheet," and then depending on if it's paper or electronic, and right off the bat they were identifying like this difference in their raw materials. It could come paper, it could come electronic, but even as you dug into the electronic, is it Excel, is it PDF, is it a backup, is it a standard bunch of reports? Can we handle anything? Do we handle the timing? All these issues. We think we have a process because we put a route sheet on it and check a lot of things off, but just the actual process that we go through isn't really something that we can repeat. And I think it really boils down to what does it look like? What is our actual process? And that what that happens inside a CPA firm, what that looks like is the staff will come in, they've got a new project, and they say, hey, what to do on this project? They answer the question, or they ask the question, and the first thing I ask back is, what did we do last year, right? We want to repeat that same process last year, so that they look in the file and they see we followed these procedures, and this is what we did, and that's what it looked like. Then the next client that comes in the door, the next process comes in, I get staff come in, what did we do last year? Only that's a little bit different for this client. And what did we do last year for the next one? Well, that's a little different for that. And what did we do last year is this common answer that we give that does not have the same answer, that does not have the same result. What did we do last year was different for every firm, for every client of the firm. And so therefore we really didn't have a process. And I started to wonder, what if we actually had a process? What if we did the same thing for every client? What would something like that look like? What would it be? What would it see? Well, in 2020, we actually did that. And to kind of spoiler alert, give you an idea of what that would look like, we wondered, could we get repetition? Could we get automation? Could we get efficiency? Could we create a process? And what would that look like? And since we did that in 2020 for the 2019 tax prep, we had some pretty um, amazing results. The first project we did out of the box was property tax returns. We dropped our property tax, the work we did on all property tax returns across the firm by 300 hours. It was over 75%, from 480 hours to 135. We went from a write-off on that. It was a loss leader for a big client of mine, but was now a write-up. It became a very profitable thing because we had a process, we had a standard thing that we did for every single one of those, and that wasn't even one of the solutions. One of the other things we saw was that we finished up every return that we had on our platform in this process. We finished them in May. There were returns in there that I didn't finish and process until after August the previous year, September 15th, when those business returns were done. Pushing them out at the last second was something that was very, very common for us. And so I found that I saved 3 months worth of time across the entire firm just for things that I was working on. And the main thing we discovered is that we could work on this year's taxes this year. In the year of the pandemic, when everybody is kind of scrambling, we had a tool that not only allowed us to easily calculate the SBA PPP loans, but actually also track and see how every firm was doing from one login. And by the time we got to the July 15th deadline, it wasn't as much pushing out the tax return, but it was adjusting the estimated tax payments, not to be based on 100% of prior year's tax, because everybody was down. They wanted us to have real information so that we were dropping our estimated tax payments based on this year's information. Some clients didn't have to pay in anything, but we had current information for everybody in the firm. We were working on this year's taxes this year in May of this year. At the point everybody else was scrambling, trying to figure out how we're going to get their work done, we're actually pretty far ahead. So, spoiler alert, that's what it looked like. And maybe one of the things to talk about is to describe why it's a problem, is to talk a little bit about the problem that we do have, and that's what it looks like to be a CPA, what's there. Most people think that the CPA's issues are based on the differences in their clients, their different sizes, single, sole proprietor, family businesses, large enterprises with a lot of levels, things like that. But really, the big difference that a CPA firm, the big challenge that a CPA firm has, is that there are 84 different accounting softwares out there. And so each of those 84 accounting softwares will have different formatted report and things like that. And people will send us information from that software. Some clients will send us a backup, and we will then download that to our server, make sure we have the software installed, and then we'll dump the balances out to Excel. Some clients will send us reports in Excel or in PDF by email, and we'll get those information. Some clients have cloud access, so we log on and download everything to Excel. Some clients have a remote server that we log in and we can download things to Excel. Some clients will print something out, drop it in a FedEx envelope, we'll scan that into PDF and get it in our workflow. Some clients will get on their computer, print out everything, jump in their car, drive to their office, come see us, scan everything in, create a PDF. And then some clients will go out to their office, we'll visit them there, we'll log onto their computer, they'll log on their software, print out a PDF, print it out, send the PDF, At that point, we can start working on the returns. So we have some trial balance software. We enter that in. We come up with the questions. We start sending out questions. They've got fixed asset additions, things that are coming up. Maybe we have an idea or a plan that we have. We send those out to clients. They send us back the answers, and we start to pump that into our tax prep software. We update that and start to file it with the IRS. Now, this is just the workflow for half of our practice with the tax compliance side. The audit side looks a little bit like this. The questions are different, but it's the same type of thing, the same reports, gathering the same information, asking all the questions after you're in, all of those things. So, and it's kind of controlled. It kind of shows everything in a format as if it's all happening together. And what we really thought would be interesting was to look at this. What if we did the exact same scenario and showed how it might work if we were working on 2019 tax returns over the years of 2019 and 2020. So at the beginning of 2019, you can see the calendar scrolling across the bottom of the screen. At the beginning of 2019, clients are spending money together, and we're not really talking very much about tax returns until after we get past April. We get past that, and we start to talk a little bit. It isn't until the end of the year that we start to get a flurry of activity, and then things really start cranking up for 2019 once we get into 2020. Clients start sending out all these reports. We're sending back answers. We're trying to get their attention. They're working on this year's stuff. They've got this year's plans, don't have time to look at last year. So we end up filing extensions, getting things till at the end of the summer. Things finally start to pick up, and we finally get those questions answered, and we get everything in and filed by September. That's what the workflow really looks like, and it's not really much of a flow. We wondered, is that, you ask, is that a workflow? And how much does something like that cost? Well, I can tell you, for us, we know it costs 300 hours, right, for those jobs. We know it costs 3 months worth of time. And what we know that all we did was work on last year's taxes all year. For me personally, in 2019, November 13th, 2018 was the day I finished the last Texas franchise tax return for my clients. That was 2 days early. So that was the first day in 2019 that I didn't have a project that had a 2018 date on it on my desk. So the idea that I'm always looking at it, always looking at last year's taxes last year has a real impact. It was really proven out there. And the other costs are obvious. They're things that we all know that we deal with. We have poor employee morale, high turnover, high stress, frustrations for the CPA, filing deadline surprises for the clients. And mainly, we've got balance, like work-life balance. What does that look like for us? There's none. There's no work-life balance for CPAs. That's what we know. And I feel like I can speak to that personally because I led a life until 2012 that didn't have a lot of balance. I weighed close to 400 pounds. That's me on the left of both of those pictures. And so I was morbidly obese. I was sleeping at the office. I had a cot a blow up mattress that I used at the office. I'd wake up, go to work. I knew for a fact how difficult and overwhelming the task at hand was. So I realized it was there. Realized what was happening. One of the things that I had learned from a client of mine was this productivity idea, this productivity tip, and it's actually a big part of any productivity tip was to touch it once. Once you start a task, complete it. Don't set it aside and come back later. And so I decided that's what I was going to do, and I was going to make changes in my life that were along the lines of becoming more effective and efficient what I did. So I changed obviously changed some things in my diet, but I changed some things in my practice. I got rid of ineffective clients. I became a flat fee biller. I did a lot of things that really, really focused on improving the process of what we did. And I had this mandate: we were going to touch it once, and we're not going to file extensions over and over again. We're not going to have just pick up, put down, pick up, put down. And everything was successful except for that part, that idea that you're going to touch it once when everything seemed to pile in at the calendar at that same time of the year and everything would stack up on my desk. I could not get past that. And a lot of it had to do with the calendar, right? I had a calendar issue. Everything was going to come in and the first couple of months, in the first, maybe by the 15th of February, all of it was due March 15th, April 15th. So 100% of my work was coming in a really compressed time. And it was already completed. There were just things I had to fix in it. So I was constantly deassembling, and there just wasn't time to get all of that done in such a compressed time for all my clients. So we dug in. What's broken here? What is the issue? What did we find? And so we found that clients had a list of issues that they gave us. Number one, CPAs gave us a lot of reasons that busy season was busy, but most of it fit into one of five categories. And runaway number one was client issues. Contrary to what many clients believe, purchasing accounting software does not make one an account. So the balances we get are wrong, and they're late, and they're not in the right format, and they don't have the right dates. It's just all kinds of things like that. Time compression, that thing that I talked about just a second ago with the calendar, the balances, we don't get them until February 15th, and the balances are set at December 31st, so we can't plan with that, and there's just not enough time to get in there. And the other ones were based, we had answers that fit these other parts in no particular order, something like inconsistent formats, the 84 different softwares. There were a lot of different accounting formats that it was in. The access to it, so clients would send us data when they were done, and it was, all the different formats, or having to log on to 100 different places to get it. All of those things were where we go get that was all different. There was no centralized place to do it. And redundancy, the idea that we redo everything. If I were to do an interim estimate for something, the balances that I would have for interim on June 30th would have nothing to do with the balances at December 31st. So the work I did on the June 30th balances would have to be repeated on the December 31st balances before I could take those balances and put them on the tax return. So I would just repeat that process. I would pick up, put down, pick up, put down. That redundancy, touch it once, that was a huge issue. So clearly we had an issue. We have a sick business. We've got all of these different things that we blame the problems on, that are our main issue. And what we found in that was that there was really one underlying issue that was creating everything else. If you looked at it and said we had the flu, what we've historically done is we've had a lot of the symptoms from the flu, coughs, colds, sick to your stomach, achy, all of the things that come with the flu, all of those side effects that we have of the underlying flu bug. We only deal with those. There's nothing we ever actually do to fix the flu except for get the flu shot maybe and take care of it in advance. But if we don't do anything in advance, we don't get that flu shot, then all we're really going to be able to do is deal with the symptoms. So the idea that we found in all of those problems that there was one underlying issue that was central to every one of these is really evident in, if you look at all of the problems that we mentioned, and if you said, what is the thing that shows up over and over again inside all of these issues that show up and repeated over and over again, and we see it's balances. Just that last one, when I did redundancy, I said balances 5 times when I went through redundancy. And if you've got a word that shows up over and over again in the middle of a bunch of problems, that may actually be the source of all of your problem. Is that the balances themselves. And so we think about that and realize that accountants actually have a balance-based workflow, right? We have clients send us the balances at the end of the year, and we don't have enough time to work with those to actually get anything done. That is, if that's the problem, we are immediately stuck because we have to have balances, right? We couldn't do it without balances. But when you really drill down and look and talk about those balances, you realize, why is that so? Because we don't know what format they're going to come in. We don't know how they're going to come. We don't know when they're going to come. We don't even know if they're going to be right. A lot of times they're going to be wrong. The only thing we know about balances every single time, 100% of the time, is that balances alone are not enough. We can't do the job we need with just balances. We need the underlying transactions if we're going to complete a statement of cash flows, update depreciation schedules, determine if a charitable contribution is deductible or not. Those kind of things, we need to actually see the transactions to know whether or not that's going to be true. In fact, if I were to do nothing but give you all of the transactions for the year, you would have enough to do the job, right? Because with all the transactions, I can create a balance. So, but nobody wants all of those transactions at the end of the year. What a mess that would be. Just get this big file with a bunch of debits and credits in it. It'd almost be like a shoebox full of receipts, which we've all seen those before. But that's where Bacotech steps in. It's because it actually is the industry's very first transaction-based workflow. And in Bacotech, we say we speak accounting because it takes those transactions and converts them into a standard for the firm. So by gathering transactions, we discovered a lot of things were true. The idea that all of those different formats that were out there is an issue isn't true with transaction. Debits on the left, credits on the right. It's been consistent for 100 years, and in the accounting, in the computerized world, it's been handled the same way. All of the fields for Microsoft Nav and QuickBooks Desktop for a journal entry, all of the field names are the same except for account ID versus account name. That's the only difference between the fields. So there's a remarkable consistency between those. And transactions are small, they're portable, they're easy to gather, and they're easy to teach. They can be smart. So if a transaction comes in and we've decided that this cash basis taxpayer has an account we consider tax significant, prepaid expenses, then when a transaction comes in for a cash basis taxpayer in a tax significant account, we can create an alert that says, hey, there's a tax significant transaction. Do you want to reverse it? Yes. Do you want me to remember to reverse it next time? Yes. And we can create real-time taxable income, just exactly like online banking, right? The power of online banking is not that they send you a PDF at the end of the month with a balance on it. The power of online banking is that they send you, the bank opens up and communicates with the accounting software, and they exchange the transactions. And the software can be smart, right? If something comes in from Staples, we can code that to office expense and say, remember to code that to office expense. And then even in QuickBooks Online, automatically code that to QuickBooks Office expense without even us asking. We're doing the same type of things with tax returns now. So we can create a standard workflow. We can create a standard tax reporting system that automatically plugs straight into tax returns. The ugly parts of your job, gathering the data from clients and pushing things onto tax forms, is the part that we eliminate. The good parts of the job, being able to talk to clients about the items that show up in alerts and help them do tax planning this year for this year, to understand what EBITDA means and what multiples mean as they look to exit. To be the kind of advisor we want to be, what our clients want to be, we'll find that we're going to be much more engaged with us in something like that. And by touching it once, that productivity tip of touching it once is possible, because by being able to teach the software to remember to do it next time, I touch it once. And in a transaction-based workflow, remember I said when I talked about redundancy that the balances at June 30th have nothing to do with the balances at year end. Well, guess what? All the transactions at June 30th are in the transactions for December 31st. So if you're in a transaction-based workflow, the work you do at June 30th is already in the workflow and therefore already done and potentially memorized for December 31st. Touch it once becomes possible. When we look at what's out there and why we were able to do this so quickly, kind of going all the way back to the very first days of online desktop accounting, when clients started to take care of themselves and Peachtree ruled the day, we know there was 7 or 8 things that you could do before you would actually create a journal entry inside of accounts payable. And all of that was to get to create that transaction, that batch processing that we did back in the day was all built on, that there are just a couple of things we could do to build that transaction. We fast forward to today, and we look at accounts payable, and bills look like bills and checks look like checks. We have all of these pretty front ends for what is underneath it just a transaction, right? Those checks are just things on top of an underlying transaction. So all of the things that are built around the functionality of a transaction inside of accounting software has grown remarkably since 1992. Those 28 years, we've seen a whole bunch of things. But let's go back and take a look at what it was, what it looked like for CPAs back in 1992. We would get a trial balance, balance sheet, income statement, general ledger, these standard reports that we got from clients for all of our for all the at the end of the year. That would be what they printed out. Um, we could we grew to where we could get those in Excel, but 20 years later, we get a trial balance. We have an adjusted trial balance. It really doesn't work. We get a balance sheet, profit and loss, maybe a general ledger, maybe a backup of the whole file. But there's really not been anything powerful that's happened in there, and it's because we've missed where all of the automation occurs, all of the functionality occurs, and that is actually the underlying transaction. And that power, what we've been able to do with Bacotech is to create a living trial balance for every client of the firm that's accessible in one place in one login for everybody. And by having all that together, we really have been able to create a lot of automation and opportunities like that. Kind of a difference in what things might look like. If we go back to that 2019 and 2020 tax return prep situation we talked about, where we were looking at preparing 2019 tax returns in 2019 and 2020, you can see with Bacotech, behind the scenes, Bacotech is going to be gathering these transactions overnight, every night. It's gathering them. We're finding out these fixed asset additions, their ideas, there are things that we have questions about, and we're getting them cleared during the year. In the meantime, we're producing consolidated monthly financials, real-time tax projections, a benchmark center. We've got automated financial statement delivery, and we got clients that are engaged because they're much more interested in how to save taxes than they are what the form's going to look like. At the end of the year, with everything all cleared off, we're pushing things straight into the tax return, just like your audits, and just like your bank reconciliation at the end of the month. Nobody does a bank rec at the end of the month. It's done all year long. You just push a button. That's the kind of thing that we're bringing into with Bacotech, and that's the kind of thing that is the power of a transaction-based workflow that we see. So what we ultimately end up seeing in here is that a transaction-based workflow actually cures busy season. By curing busy season, it treats the symptoms like client issues, time compression, formatting, access redundancy. All of those things are addressed when you fix the underlying problem of why busy season is busy. Then it cures all of the symptoms. If you don't ever get the flu, you don't have to deal with all of the other issues. If you don't address the flu before flu season, you're stuck with just treating the symptoms, which is what we as an industry have done for years and years and years. This makes it so we have one platform that we can communicate with clients without opening Outlook and email. We can update returns and fixed assets without opening our tax prep software. We can make or suggest adjustments without opening client accounting. We can automate and post tax adjustments real time, one time. We can project taxable income without opening a prior return. We can get our lives back. So that is the part that we saw. Thank you so much for your time today, and I will, you see I've got a couple of the things that we saw inside of our firm. I'll leave this with you now, but thanks so much for your time.